Allow me to greet you and say shalom while I'm about to begin with the topic of creditors reconciliation statement. I will begin by reading the theory behind this topic or this reconciliation. Then after, I will have to go to the procedure in terms of how do we do the creditors reconciliation. Then after, I will do an exercise, not a very long exercise. Then after, I will go out of your ears. It says creditors reconciliation statement. The personal accounts in the creditors ledger must be compared with the statement received from the creditor. So now we have to compare the creditors ledger, which is a liability on our side, because a creditor is the liability which increases on the credit side. And there is a statement that we will normally receive from the creditor. Therefore, now we have to compare those two. And very important is the fact that when we compare the creditor's ledger, which is our ledger account, comparing this with the statement, we compare it with different signs, because when we buy something on credit from our supplier, we will be increasing our creditor's control on the credit side. But the creditor will record that on the debit side, because they are treating us as a debtor, because money that we owe to them, it is money that is receivable from us to them. So now that means the credit side of the creditor's ledger is compared with the debit side of the creditor's statement. I will show you that not very late. The balance per ledger account should be the same balance indicated on the statement from the creditor. That is the purpose of the reconciliation. Very often these balances do not agree, because, and these are the these are the major reasons or the popular reasons why there will need to be a reconciliation, or there is a difference between the two. The date of the account balance do not agree with the date of the statement, meaning where the dates are different. We have the ledger account up to a certain date, but the statement from the creditor is for up to a different date. Payments to the creditor reflected in the ledger account has not been received by the creditor, meaning where we make a payment and we pay the creditor, and that amount has not yet reflected in the statement of the creditor. So now that will be some of the reason why we'll have to have differences and reconcile. Discounts or returns claimed by the business was not allowed by the creditor. They say that there is sometimes some mistake that discounts or return of goods and services that were bought on credit by the business, claimed by the business, was perhaps not allowed by the creditor. So such mistake will result into the differences between the creditor's ledger and the creditor's statement. Mistakes made by the creditor or the business. So now meaning we as the business can record an amount in the creditor's ledger by mistake, and also the creditor can record amounts in the creditor statement by mistake. So now we go to the next sentence. It says, before the creditor is paid, the balance on his account in the ledger should first be reconciled with that of the statement. So before we can pay, we must know that the amount that we are paying is the correct amount, rather than paying yet there is a difference between the two, because we might think we don't owe them, yet we owe them, and we might think we owe them, yet we don't owe them. Why? Because of these issues, the dates, the amounts, the mistake that we might make, or the mistake that the creditor can make. Then now it says below, we have to follow some procedures when we are doing the creditors reconciliation. First procedure is to compare the debit side of the ledger account with the credit column of the statement, and tick off the amounts that appear on both sides as correct and do nothing about that. if the amount appear both sides, then after you tick them and you do nothing about them, unless obviously there is an adjustment that states otherwise. So now let me show you in the example that I will do, what do we mean about this. We will normally be given a ledger account, and this is a ledger account. There is a line here and it's supposed to say Election Ltd. This is the creditors ledger. From the books of the business, we have recorded all the purchases, all the discounts, and all the returns. So now I want to go back to the first procedure. That says we compare the debit side of the ledger account and we compare that with the credit column of the statement. So now we go to the debit side. Now on the debit side, remember this is the creditors ledger account, and we know that creditors ledger account increases on the credit side and it decreases on the debit side. And the reason why it will decrease on the debit side is because we have made a payment, we returned, or there was some discount granted to us. So now we compare this debit side where our liabilities are decreasing, and we compare this not with the debit side of the statement, but we compare this with the credit side of the statement. Why do we compare this with the credit side of the statement? It's because the creditor, who is Election Ltd, the one whom we buy on credit from, when we buy from them, they treat us as a debtor because they are selling to us on credit, but we are buying from them on credit. So now when we buy from them on credit, we treat them as creditors, meaning liabilities that increase on the credit side. But when they are selling to us the inventory that we are buying, they are selling to us, so they are treating us as the debtor because we have not yet paid. So now, meaning debtors increase on the debit side and they decrease on the credit side. That's why now when that procedure says we compare the debit side, remember on the debit side, that is where we make the payment. If we pay our creditor, we will record that on the debit side of the ledger account. But the creditor will record the creditor will record that on the credit side of the statement. Why? Because they are treating us as a debtor, and debtors increase on the debit side whenever we buy inventory from them, or whenever they sell inventory to us, their debtors will increase on the debit side. So now when the debtor makes a payment, that means the debtor will be decreasing on the credit side. Or when they give a discount, or when the debtor returns inventory, they will record that on the credit side. So now that's why when it comes to the sides, it is the vice versa. So now I'm sure the next procedure will tell us that we have to compare the credit side of the creditors ledger. This is the creditors ledger, meaning a liability. And we compare this. Remember, credit side is when we buy something on credit from the supplier, meaning our liabilities will increase. But whenever we buy on credit from the supplier is selling to us on credit. So now if somebody is selling to us, is selling something on credit, that becomes a debtor. So now the creditor will record that sale on their debit side. Why? Because they are selling something to a customer on credit. So now they will be increasing their assets, and the assets namely called debtors. So now they will be increasing their debtors on the debit side. That's why when we compare, we cross things around. So this is very important to take note because it will help us when we do the reconciliation. So now I decided to draw this because it's a ledger account, but it was not clearly stated as the ledger account. And if you can see here in this ledger account, we do have a balance carried down, which at the end of the day will become a balance brought down of 16,158. So that will be a balance brought down. So now this is really a ledger account, the creditor's ledger, and this is the statement received from the creditor, which is Election Ltd. So now I'm not perhaps going into details because some of the basics are from the bank reconciliation statement that I did previously. So now this is the first procedure, and it says if the amounts appear both sides, you tick it off. Then after, you do nothing about that because it has been recorded correctly by both entities. Procedure number 2, we compare the credit side of the ledger account with the debit column of the statement. Then after, we tick off the figures that appear both sides. Then after, we do nothing if the amount appear both sides. Then after, unless there's an adjustment stating otherwise. Then after, it says items on the ledger account. Items on the ledger account or statement not ticked off indicate that either the ledger account or the statement from the creditor is incorrect. And if that's the case, what do? We do an investigation, or we investigate the transaction on the accounts and the statement. Then if the ledger account is found to be incorrect, make the necessary journal entries and post it to the ledger account. If the ledger account is incorrect, if the ledger account is found to be incorrect, make the necessary journal entry or entries and post to the ledger account. So now if the ledger account is incorrect, we don't correct it in the reconciliation, but we correct it through the general journal to the ledger account. Then if the statement is found to be incorrect, and this is the same in both cases, if the statement is found to be incorrect, we make the entry in the creditor's reconciliation statement. This is the same with the bank reconciliation statement. If the cash books are right, but the statement is incorrect, therefore now we record that in the bank reconciliation statement. But we are not in the BRS now. Then the conclusion says the adjusted balance of the ledger account should now agree with the adjusted balance on the statement. The adjusted balance in the ledger account should be the same as the adjusted balance in the statement. Obviously, we would have adjusted all the figures. Now we have the skeleton of the creditor's reconciliation statement as at whatever date it might be. We get a balance per statement. So now we take the balance of the statement, which is likely to be the balance at the end of the statement. And this is similar with the bank reconciliation statement. So we take the balance, which is 17,793. That will be the balance that we take, balance per statement. And this balance will be on the credit side. But it's just one column. It's not necessary for us to have two columns, but I will do it in a two-column format. And very important, the second line item, it says add adjustments if the balance is understated. Very important, and I will come back to this when I'm doing the actual exercise below. Meaning, if by recording the incorrect amount in the statement, then we realize that the balance, which is this balance, it is overstated. So now it is understated. We have to add that amount of being understated. If the balance was underestimated, the difference will have to be added. But we have to subtract adjustments if the balance is overstated, meaning the amount that was recorded, if the balance was added to the balance, or if the amount was added to this balance, therefore now this will have to be subtracted. And I want to emphasize to these two sentences because they are very important. I will explain them in details when I'm doing the statement, the meaning of these figures. And they say if the balance, the key word is the balance in here. If the balance is either underestimated or overestimated. And let me just go now to the statement. Now, if you look at this statement, remember, the statement is the statement of the creditor, and the creditor treats us as a debtor. So now we know that on this side, on the debit side, the debtors are increasing. and on this side the debtors are decreasing. So now, meaning if we have recorded an amount on this side, or the amount has been recorded by the creditor on the debit side, that will mean this amount is recorded on the debit side. It will obviously be a plus, increasing the debtors of our creditor. So now, meaning the balance that we see here will be overstated if this amount was overstated on the debit side, because debit side of the statement indicate an increase. So now that amount, if it's overstated and it's on the debit side, that will mean now the balance that we see will be overstated. But if the amount recorded on the credit side, remember the amount on the credit side is the decrease in debtors, because our creditor sees us as a debtor. So now when they record something on the debit side, they are reducing their debtors, either because the debtor is returned inventory, or either the debtor has been given a discount, or either the debtor has made a payment. So now if we have recorded an amount here and is overstated, that will mean now our balance here, or understated, will be reduced by the amount recorded on the credit side. And let me bypass this, knowing that it's not yet clear, but I will come back and clarify you on this with regard to the skeleton of the of the creditors reconciliation statement. Then after we have the corrected balance as per account, that will be the closing balance that will be aligned with the creditors ledger account. So now we have just touched base on the introduction. Let us go to the real exercise. So now we are given this exercise, and I want to erase everything so that I start from the beginning or from scratch. Now, it says the following information was taken from the books of Africa Traders, and we are given Election Ltd. And I want again to say this is a ledger account of the creditor. Election, yes, Election Ltd. is the creditor. Election Ltd. The name of our company is Africa Traders. This is the name of the company, Africa Traders. But Africa Traders buy inventory from Election Ltd. Most of the times on credit, if not all the times. So Africa Ltd. buys inventory from Election Ltd. on credit. Therefore, now that means Election Ltd. becomes our creditor, meaning Election Ltd. is a liability to us. Be mindful of that. But to Election Ltd., they are treating us as a debtor. Election Ltd., they are treating us as a debtor. Why Election Ltd. are treating us as a debtor is because they are selling inventory to us on credit. So now they treat us as a debtor. But this is the ledger account of Election Ltd. recorded in our books as Africa Ltd. We treat him, meaning Election Ltd., as an entity, being a liability in this case. That is why you see the opening balance here on the credit side, because Election Ltd. is a creditor, is our supplier, so is a liability to us, which increases on the credit side and decreases on the debit side whenever we return inventory or given a discount or we make a payment to our creditor. So the ledger account, I suppose, now is clarified. Then we have the following statement that was received from the creditor Ltd. Now, as I said to you that when we buy inventory from creditor Ltd., creditor Ltd. is selling that inventory to us. So now, if they are, or when they are selling inventory to us and they are selling it on credit, so now they treat us as a debtor, meaning as an asset. Take note of that. So now for them, whenever we buy, that will be increase in their debtors because they are selling to us on credit. And whenever we make a payment, we are reducing our account, meaning their debtors will be decreasing on the debit side. But in our books, we treat Election Ltd. as a liability, but in their books, Election Ltd. treat us as an asset. So be mindful of that, because that becomes the gist of the creditors reconciliation statement. If you miss that point, it will be difficult for you to understand this concept or this topic. So now we are clear that going back again, we are very clear that if we buy on credit, going back to the ledger account, if we buy on credit, we record all the entries here. Buy on credit, we record on the credit side. So that is when we buy on credit. So now we record everything to the credit side, but Election Ltd is recording everything on the debit side. Why? Because they sell on credit to us. And whenever you sell on credit to a customer, that customer becomes a debtor, and debtors increase on the debit side. And sorry guys, I want to emphasize on this because this concept of creditors reconciliation does not easily sink to the minds of students. So now that is how we'll be dealing with this. And I go now to the debit side of the creditors reconciliation ledger. Then now the creditors ledger. On the debit side, you can see there is bank, there is discount, there is purchases return, there is purchases return. Meaning on the debit side, if we pay our creditor will decrease on the debit side if we make a payment. So now, meaning the debit side is where we are reducing our liability. Our liability decrease on this side. But the creditor will record that on the credit side. Why are they recording that on their credit side? Because now when we are paying them, they are treating us as a debtor, remember. So now they are reducing the debtor's account on the credit side, because the debtors and asset, it decreases on the credit side when the inventory is returned, or when the customer has been given a discount, or when the customer has paid. So now be mindful of this crossing of comparison, that we compare debit side with the credit side. So now I think I have clarified this. I will still repeat it along the way as I will be explaining the rest of the stuff, or when I'm doing the reconciliation. So now let me just redraw the line so that this thing, when I'm erasing, it erases everything. Election Ltd. So now we know that this is increasing on this side, is a liability, and this decreases on this side, still a liability. This is an asset increasing on the debit side. The creditor treats us as an asset, and this is an asset decreasing on the side. Assets decrease on the credit side. So now a plus in the ledger. Let me say this in closure now. A plus in the ledger. Here, take note, this is a plus. A plus must be compared with a plus. Nothing changes. And a minus must be compared with a minus. There is the minus. I think from now I've simplified it for you. So now let me then leave this part and start to read everything that is given to us. So now we are given the statement. I've shown you in the statement. Then I just want to go through the notes. Then after we see what the notes are telling us. Under the notes, it says, number 1, only half, which means 1/2, the discount was allowed by the creditor on the 2nd of April. So now that means they are telling us that the discount was not all allowed. Only half of the discount was allowed by the creditor. Let us look at this discount. Where is this discount? It says only half the discount was allowed by the creditor on the 2nd of April. So that means the discount that we see on the 2nd of April, the discount that we see on the 2nd of April, the discount of 170, they say no, the correct amount is half of that. It's not the full amount that we're supposed to have recorded. So 170 divided by 2 is 85, meaning the correct amount of the discount was supposed to be 85 Rand, not 170. That's what this note or additional information or adjustment telling us so far. So now we need to take that into consideration. And I also want to do another further analysis with regard to this question. Now we have a payment to the creditor. And this payment to the creditor, 85 there, is the total of the bank and the discount. That is the sum of the two. I want to show you that the payment is the full amount. So now it is 4,330, which is the bank amount, plus 170, meaning the amount of the discount. That becomes 4,500, the amount that was being settled, the amount that we have recorded as the decrease in the creditors ledger account. And on the same day in the statement, if you look on the same day, there is cash and discount. Remember, we recorded 4.5 on our side as a payment with a discount, which is incorrect. And the creditor on their side, they recorded the correct amount of 4,415. So let us say minus 4,415. We can see that the difference between the net of this payment with the discount and the net of the payment with the discount is 85 rand. So we can see that the creditor is correct and we are not correct, in other words. So now we need to make an adjustment because our debit side is overstated. So now if the debit side is overstated, we'll be recording a journal entry where we reverse or decrease the discount because the discount is overstated. Then after we increase the creditor's control. I'll do that just now. So now that is the first entry that will need to be taken into account. I will come back to it. Then number 2 says items on the 11, 18, and 29. The statement was wrong, or the statement is wrong. Okay. Items on the 11, 18, and 29. The statement is wrong, meaning the creditor's statement is incorrect. So meaning items on the 11 in the creditor's ledger, on the 11, on the 18, and on the 29, the creditor's ledger is correct. And remember, if the statement is incorrect, we make a correction in the creditor's reconciliation statement. So now this correction will go to the creditor's reconciliation statement, creditor's reconciliation statement, and creditor's reconciliation statement. So now that is where the statement is incorrect. And it says for all other items, the ledger account is wrong. So now all other items, including the including the discount that we just talked about, meaning on the second date, the ledger account is incorrect, the discount is included there. The purchase on the 10, that might be incorrect, we don't know. On the 12th, the ledger account. On the 15th, the ledger account. The 30th is the balance. So now for those items, we need to take them into account in the ledger account because the ledger account is the one that is incorrect to some of them. So now we have taken this into account. Let us check what we are required to do. We must do journal entries to correct the mistake in the books of Africa Traders. In the books of Africa Traders, that is what we must do. Then after we have done this, then we can immediately do now the ledger account, which is the ledger account of Election Ltd. Remember, this is the creditor. Election Ltd is our creditor, meaning it's the liability. Will be doing the creditor's ledger account after the adjustment has been effected. Then after number 3, we do creditor's reconciliation statement as at 30 of April in the year 2002. So now with this in mind, let me go and start with the ones where we were incorrect. And I'm saying where we were, I'm referring to us as Africa Traders. And when I'm saying us as Africa Traders, I'm referring to the Election Ltd ledger account where we record the figures for our creditors ledger account called Election Ltd. So now we have first discovered that the total amount on the second, remember, I want to repeat that. The total amount on the second, hope it won't delete everything. The total amount on the second, the total, remember, on the 11, on the 18, and on the 29, the statement is wrong. For all others, the ledger account is right. So here we are right. 11, 18, the ledger is right. 29, the ledger is right. So I will repeat this if it erases it. So now meaning on the second, the ledger account is incorrect. And this is one entry on the second. Even if this note was not there, let me show you this. Even if this note was not here, there was no need for us to identify this note because we know that all other dates, the ledger account is incorrect, meaning including the second. So now we start on the second and we say there was one entry made of two figures. So now we say 4,330 plus 170. Then we see that this is 4,500. Then after we say on the second, there is 4.5. We compare that with the same date on the second in the statement. In the statement here, the second, the correct amount is 4,415. So we say 4.5 minus 4,415, and this gives us 85 rand. And that 85 rand now is the one that is clarified in this note, that it was because of the discount. That's the only thing that was very important. So now we can see that we are wrong, and let us check if how much we have recorded. We recorded 170 instead of 85. Remember, the total amount that we recorded was 4,500 instead of 4,415. So that means we have overstated our debit side, meaning we have over reduced or over decreased our debit side. So now our creditor is over decreased, meaning we need to increase our creditor, and we know that creditors increase on the credit side. So now we need to debit our discount and credit our creditors control. So the credit entry will be creditors control because we have over decreased our creditor by 85 rand. Therefore now we have to record our discount because this was a discount. We have our discount received. Our discount received is 85 rand. So now this is the amount that will go to Election Ltd, the date of the second. Then now we can also note that it was on the second. Then we have recorded the first entry where the statement is incorrect. Sorry, where the ledger is incorrect. The next date will be the 10th. Then we say on the 10th we have 6,978, which was a purchase. Take note, we bought inventory on credit, 6,978. Let's check on the statement. On the same date, the 10th, it was goods, 6,978. No, it appears both sides. Then we can just tick it and tick. Remember, do nothing if it appears both sides as the same amount. Then after we go to the next date, which is the 11, we are correct. So we skip the 11 because the ledger account on the 11 is correct. Then after we go to the 12, on the 12th there was a purchase. We bought inventory on the 12th that we recorded 4,658. And on the 12th they treat that as goods 4,500. There is a difference here. These figures are not the same. These figures are not the same. Let us strike the difference. We have an amount of 4,658 minus 4,568. We recorded more than what we're supposed to have recorded. So now we recorded 4,600 instead of 4,568. 4,658 instead of 4,568. So now it means we need to reduce our credit side by recording the 90 rand on the debit side. So now meaning we need to reduce our creditor on the credit side, because remember, creditors control increase on this side, so this is overstated. We need to now reduce our creditors control on the debit side, and the contra entry will be purchases. So now this is on the 12th day of the month of April. Yes, on the 12th is on the 12th day we reduce our creditors control because we have overstated them. Remember, creditors control increase on the credit side 90 rand, and this was purchases. So now it will be the same amount of 90 rand purchases, and that has been taken into account. Remember, purchases were also overstated because if we buy inventory and we overstate it, meaning it will be recorded on the debit side under purchases. So now we have corrected that. Let us look at another date now and see which other date that is still left. The 12th date, we have covered that one. It is done, and this one is also done. We look for, remember, we look from the ledger account. On the 15th, yes, on the 15th, there was a return of inventory. Remember, if we return inventory, we are reducing our creditors, because we are returning the inventory. Then the amount that we used to owe the creditor will decrease by the value of the inventory that was returned, because of maybe unsatisfactory or the wrong inventory that was delivered. So now we recorded the return on the right side. The return is very important also to note if is the amount on the right side. So now we have 600 on the debit side, which is purchases return, and we know that returns are supposed to be on the debit side. That is correct. So now let us see on the 15 in the statement, where is this amount recorded? The amount is recorded as 60 rand. Is the question again, a question that is very important that I forgot to ask. Is this return on the right side? Very important to ask that question. Now, the return is on the right side in the ledger because the return is supposed to be on the debit side, decreasing the creditors. And from the creditor side, remember they treat us as a debtor, meaning as an asset. And if the debtor returns inventory, that will be reducing or decreasing debtors control on the credit side, because debtor is an asset and it decreases on the credit side. So the 60 rand is on the right side also with the statement, and on the right side is 600 also with us. But the fact remains that the statement is correct, and we are not correct with number 15. Remember, go back again. Number 11, note number 2. Number 11, number 18, number 29, the statement is wrong. For all other items, the ledger account is wrong. So now the statement is wrong with number 11, 18, and 29 is wrong. So now all other dates, meaning the ledger account, is wrong. So the statement is right with number 15, but wrong with number 11, 18, and 29. So the statement correctly recorded 60 rand, but we incorrectly recorded 600. So now we need to reduce our debit side of the ledger to the difference, and we reduce that on the credit side. So we have 600 minus 90, meaning we have 600 minus 60, not 90, which gives us 540. So now we have to increase our creditors control because it was over reduced. We have decreased our creditors control over by 540. It was supposed to be only 60 rand. So now we have to increase our creditors control by 540, and that was because of the purchases return. So now we debit our purchases return, the return of goods and services, and we increase our creditors control. We increase our creditors control by 540, by 540. And this was on the 15th day, if I am not mistaken. Yes, it was on the 15th day. So now we have corrected that, where we have over reduced our creditor on the debit side because creditor decreased on the debit side. So now we had to adjust that. So now we go to the next entry. So the 60 rand has been taken into account. This one is done. This one is also done. Let us look for another date. So we have covered the 15th day. Another date is no more in the ledger account. We have covered all of them. We have covered the 2nd, covered the 10th, covered the 12th, covered the 15th. So now all the amounts where the creditor's ledger account was incorrect, we have corrected them in the general entries. Remember, if the ledger is incorrect, you write a general entry. So now we have corrected everything that was incorrect with the creditor's control account or ledger account. Then now we have to do the second requirement now, where we transfer all these corrections into the ledger account. We effect them into the ledger account. Very easy, no transmesh. So now we do a ledger account for Election Ltd, creditors ledger. We do creditors ledger, and that creditors ledger is Election Ltd. Election Ltd. That is the ledger account. So now we have to start with the opening balance. Opening balance of 16,158, which comes from the closing ledger account balance. We take the closing ledger account balance, the incorrect one at the end, always 16,158. You take the balance at the end of the year, the incorrect balance, 16,158. And that will be, remember, this is a balance carried down. It would have went to become a balance brought down here. Balance BD, 16,158. But it cannot be a brought down until we first do the reconciliation. So this is a credit balance, 16,158. So this will be a balance of 16,158. Then we have recorded creditors control by, we have credited it by 85 rand. And the reason why it was a discount that was received. So now we record this as 85 rand for discount received. Discount received for 85 rand. Look here, creditors control is credited. Creditors control is credited. So that's why our creditors control is also recorded on the credit side, which is increasing, and this is the debit side. And again, here is creditors control on the debit side by 90 rand, which was purchases. So now on the debit side, we record 90 rand, and this is simple purchases. 90 rand simple purchases. Then after, now we record again our creditors control. We can see them here as creditors control credited by 590. Why? Because this was the purchases return. So the contra entry will be purchases return for 510.40. So we record this as purchases return. So after this has been recorded, therefore now we can balance our ledger account, creditors ledger account. We can balance it. The bigger side is likely to be always credit side. Plus 85 rand plus 16,158. It gives total of 16,783. 16,783. Then the difference between the debit and the credit will be the balance carried down, 16,693. 16,693. Then we have the balance carried down, and that becomes the balance brought down, 16,693. Balance brought down. So now the ledger account is done, and from here we can do the creditors reconciliation statement. Now we can do creditors reconciliation statement. And I think, okay, 1, 2, 3, 4, 5. Okay, I have to go to the next page. Then we do creditors reconciliation statement at 30 April 1992. Creditors reconciliation statement at 30 April 1992. We start with the balance per statement. Balance per statement. And I prefer to write this under 2 columns. Where we have the debit and the credit. Balance per statement. And the balance per statement is at the end of the statement. For a ledger account, we took the balance at the end of the ledger account, and for a statement, we take the balance at the end of the statement. Remember, I also, okay, 17,793 is 17,793. We said where the statement is wrong, take note number 2 is on the 11. Therefore, we said this will be creditors reconciliation statement. This will be creditors reconciliation statement. This will be creditors reconciliation statement. Where the statement is wrong, we reconcile. So now, let us look at the figures that will need to be reconciled. We don't know either it will be a plus or a minus. Will it be an add or a subtraction? Remember, go back now. It said add adjustments if the balance is understated, and less the adjustments if the balance is overstated. And the balance they are referring to is this balance. Take note. And I said the word balance is very important, is the key. If the balance is overstated or if the balance is understated, you add or else subtract. So let us go and check if now is the balance overstated or the balance understated by the entries that were incorrect in the statement. So in the statement, let us go and look at the 11th date. On the 11th, we have return which is recorded as 82 rand. First of all, as I said to you when I was doing the 60 rand and the 600, I said that first question that you need to ask yourself is the amount on the right side. That's the first thing. Is the amount on the right side? Remember, as I said to you that the creditor's statement is recorded from a debtor's perspective. The creditor treats us as a debtor. So now if we are a debtor, meaning we are increasing on the debit side and decreasing on the credit side, whenever we buy inventory from them, they record that as a plus on the debit side, increasing their debtors because they are selling inventory to us on credit. So now if we are given a discount, that should be reducing their debtors on the credit side. And if we as the customer, meaning Africa Ltd, we return inventory to them, we expect that it should be reducing their debtors on the credit side. So now if we look at this 82 rand, 82 rand is on the debit side, meaning they have overstated their debit side. So now remember once again that the 82 rand was recorded on the debit side, and I just want to prove something to you. This 82 rand was added in the balance before 82 rand. That balance of 8,243. They said plus 82 rand, and that became the balance after 82 rand was adjusted. So let us check now if does the 82 rand overstate the balance at the end or understate the balance at the end based on the information that I clarified you on the theory above. So now it's 8,243 plus 82 rand. We can see that it gives us 8,325. So now that means the amount that we see here, which is the balance, is of 17,793, is after 82 rand was added. And remember, the statement is wrong. So now the statement recorded 82 rand on the wrong side, overstating the balance. Take note. And I want to go back again. It said under less adjustments if the balance is overstated. So now is the balance that we see here at the beginning, which is this balance. Is this balance overstated, which is the one that we have recorded here? This balance. Yes, this balance is overstated. Why it is overstated? It is because we have increased this balance by 82 rand instead of the correct amount of 28 rand, because the correct amount on the 11 in the ledger account, the correct amount is 28 rand. So now we can see that the balance at the end of the statement is overstated by 82 rand. And 82 rand beside is recorded completely on the wrong side. The 82 rand, which is a return by the customer, because we are the customer to Election Ltd. This 82 rand was supposed to be recorded on the credit side. So now the fact that it was recorded on the debit side, we first have to cancel this entry because it was recorded on the wrong side. So now by cancelling this, we are the creditor would have to record this on the credit side as 82 rand. So now we are, remember, doing the statement from our side as the creditor, because we are the creditor to Election Ltd. So now when we are recording this, we have to say less. because we have overstated that balance. So now we have to say less the returns. This was returns. So now first of all, under our returns, we have to say, okay, 82 rand, and I'm recording this 82 rand here, but it can, let me record it here. Then I'll just combine the figures. So now what am I doing now when I'm recording this on the debit side? Because it's on the debit side here. It raises the question, it's on the debit side here, which is 82 rand. And it was supposed to be on the right side. So it's completely on the wrong side. The right side was supposed to be 82 rand on the credit side, though the figure is incorrect. So now the 82 rand, which is on the debit side, remember it's on the debit side from the creditor's perspective, because the creditor is treating us as an asset. So now they mistakenly recorded this as a debit. Now from our side, if they recorded this as a debit, take note, this 82, this mistake of debit, to us it would have been a credit of 82 rand. Be mindful of that. Take note of that. It's very important. So now I am pasting the mistake in our books of Election Ltd. This is the mistake that was done by Election Ltd in their statement. So now they recorded 82 rand on the debit side. And that mistake, if we had to reflect that mistake on our books, meaning in the ledger account of Election Ltd, who is a creditor, this 82 rand will have to be recorded on the wrong side, which is the debit side. To us will be the wrong side, being the credit side. And this is very important, guys. So now this is wrong. This is on the wrong side. Recorded on the wrong side from the creditor's perspective, who views us or who sees us as a debtor. So now, and I'm taking the same error, I'm recording the same error on the wrong side in the ledger account. So now this will mean that this is the wrong side on our side. This will mean this is the wrong side. So now if this is the wrong side, and we are correcting this from our viewpoint as as Africa Ltd. We are correcting this now from our viewpoint. So now when we correct this, we'll be correcting it on the debit side. And hence now this correction of 82 rand is corrected on the debit side, because we are doing the creditor's reconciliation statement from our perspective, us as Africa Ltd, where we see Election Ltd as a creditor. So now we take the mistake of Election Ltd and we say, okay, Election Ltd, you have recorded 82 rand on the debit side, which was a return. Remember, the return of goods and services was supposed to be on the credit side. So now we say you recorded it on the debit side, meaning increasing your debtors, who is us. So now we take the same mistake, we reflect it in our books and we say, okay, how would we have made the same mistakes if we were them? So now that will mean that we would have recorded the 82 on the debit side as the return of goods. That will be recording the same mistake on the wrong side. From our side, Election Ltd is a liability. So if they are increasing their debtors on the debit side, meaning they are increasing us as a liability on the debit side, meaning our liabilities are inflated on the credit side by 82 rand. So now when we correct from our perspective, where we say this mistake of the debit side is a credit on our viewpoint. So now we are correcting this, or reversing, in fact, we are cancelling. We are not even correcting. We are cancelling this because it was on the wrong side. First of all, cancel the mistake that was done by the creditor. So now how do we do that? We cancel this completely because it was sitting on our credit side, meaning the ledger account. So now we cancel this on the debit side, and we do that in the reconciliation by recording the 82 rand. Returns corrected. Let me say returns corrected. No, returns cancelled. Returns cancelled. Then after now, I go to the second part of returns. returns correctly recorded. Now I go now and I say, okay, this mistake now has been cancelled. We recorded it on the debit side, there is 00. Therefore, now we need to record the correct amount. The correct amount is how much? Is 28 Rand. That is the correct amount. Correct amount there is on the 11. We are correct, is 28 Rand. And now, if we are returning, which side is the 28 Rand supposed to be recorded from our point of view? If we are making a return again, which side are we supposed to be recording the return? Return is supposed to be recorded on the debit side. That is why we record the return on the debit side of the creditors reconciliation statement. The first 82 Rand we were cancelling, and I want to emphasize on this, we are cancelling the copied mistake on the credit side, and we cancel that on the debit side. So this is the cancellation of the mistake that was done by the creditor. Then after we record the correct amount on the correct side. Remember, the reason why we cancel this because the 82 Rand was recorded on the wrong side. So we reversed it by cancelling it on the debit side. So now we have recorded all this, and you will see perhaps this in the memorandum that they record this as one amount. They just show it in calculations. They don't separate it. You'll see they just say returns 82 Rand plus 28 Rand, and that becomes a total of 110. But I've shown you that it's two separate entries. You can record them separately, but in the solution you'll see that 110. But now you have seen how these two link together. Otherwise, is the correction of one amount of the return. And that's why now it seems as if we are adding both of them. We are not necessarily more like recording both of them. This 82 that we record here as 82 on the debit side, which is here, we are cancelling the mistake of the creditor, which that mistake means a credit to us in the ledger account. So now I don't know how much more I can emphasize, but I know that it's not so easy for students to understand this concept. I've been teaching it for some years, I know. So now we have covered the 11th day where we are correct. Don't forget, I want to go back to the note. In the note, on day number 11, 18, and 29, the statement is wrong. So now, how wrong the statement is, once again, the statement can be wrong with the amount. The statement can be wrong with the recording of the wrong amount on the wrong side, or the right amount but on the wrong side. So now in this case, we discovered that the statement recorded 82 Rand on the wrong side, and 82 Rand is the wrong amount. And the minute the amount is wrong and is on the wrong side, you first have to cancel that amount by cancelling it to the opposite side. And we said the wrong side from the creditor's viewpoint, which is a debit, to us will mean 82 Rand on the credit side. Because to us a creditor is increasing on the credit side, and to them a debtor is increasing on the debit side. So now we copied the mistake in our books and we said that debit to us is a credit. So now how would we correct this 82? Cancel it on the debit side. And we recorded the 82 Rand on the debit side of the creditors reconciliation statement, and here we have. Then after we said we must record the correct amount. Which side are we supposed to record the return? Return belongs to the debit side. Therefore now that's why the 28 Rand again is on the debit side. Both of them we added there. They are both on the debit side, and that is the end of this part. I'm emphasizing because this is very complex for students to understand, honestly, I know. Now, we go to the second date, which is the 18. On the 18, we have the furniture which amounted to 2.3. And remember, we are right. We are correct as the ledger account, or as Africa Ltd, where we record Election Ltd ledger account as the creditor. Then now they recorded 3,200. So we have comparison of the two. Let us see how much is the difference. We have 2,300 minus 3,200, and this becomes 900. How much did they record? The difference is 900. So now we are right with 2.3, but they recorded 3.2. So they overstated their debit side, or their balance. Let us go and check again. I want to go again. Now, is this 3.2 overstating the balance? Because there's 900 included, which is more than what is supposed to be. Let us test now if does it overstate the balance. Check again. Does it overstate the balance? Remember, recordings on the debit side is a plus, so it's obvious. Anything that is on the debit side is increasing your balance. Want to go back. Less adjustments if balance is overstated. How much was supposed to be recorded on the debit side? We're supposed to have recorded 2,300 as it appears there on the correct ledger account. But how much have they recorded? They recorded 3,200. Because debit side is increasing the balance, it means now the balance is overstated by how much? By 900. Therefore, 900 will have to be subtracted. That's why 900 for goods overstated will be recorded on the debit side as goods overstated. So this will be goods overstated. Now, another viewpoint again. If the correct amount, and now this is another side that you might not see in perhaps in the class test. If now here we had 3,200, assume this was 3.2, and here we had 2.3. This was the amount recorded here. So now that will mean now our balance would have been underestimated by 900. So now if that was the case, where the incorrect amount is understated but on the right side, that will mean now the 900 of understatement will have to go back and reference once again. Now add adjustments if the balance is understated. That will mean the 900 will have to be recorded now on the credit side as 900 because it would have understated or underestimated the opening balance. So now I'm saying this so that you are able to apply your knowledge at all times. Now we have covered this entry by looking at it in both sides. Now let us again ask the same question. Ask the same question for the same date. On the 18th, this was furniture. So meaning if there is furniture on the credit side of the creditor's ledger, meaning we bought furniture on credit from the supplier. So now if we buy on credit, and remember the ledger account is correct, and if the ledger account is correct, meaning we made a purchase, and if we buy, our creditor will increase on the credit side. And when we buy, this amount supposed to be reflected on the debit side of the creditor statement. Why? Because the assets of the creditor are increasing, meaning the debtors of the creditors are increasing because they are selling to us furniture on credit. So now their debtors will be increasing, and debtors are supposed to increase on the debit side. and you can see that this amount is incorrect but is recorded on the right side, as opposed to the 82 rand, which was a return that was recorded on the wrong side, which was supposed to be on the credit side. So now be mindful of identifying if is the amount incorrect, yes or no. Is the amount recorded on the correct side or on the incorrect side? Because if it's recorded on the incorrect side, you first have to cancel it from the perspective of the error if it was done from the business ledger account, which is Africa Ltd ledger account, or which is Election Ltd ledger account, which is Africa Traders business books. So now we have clarified each other on that, and I think now I have done enough grace to explain also this part of the question. So now we, again, if you want to prove, you can say the balance there that you see, this balance that is aligned with the 60 rand plus 3.2, you will see that it gives you 16,000, meaning 3.2 must have increased the closing balance. If you say 12,833 plus 3,200, we get 16,033, meaning all the debit side entries, all the amount on the debit side, they are increasing the balance that you see at the end. So now that means 3.2 increased that closing balance. And now, as the correct amount was supposed to be 2,300, but we recorded 3,200, meaning the closing balance is overstated by 900 rands. So now that's why now we go back once again and we say, okay, what is the procedure says? It says less adjustments if balance is overstated. And balance is overstated by 900. Therefore now 900 must be recorded on the debit side of the creditors reconciliation statement. There is on the debit side, reducing the credit side or the balance. So now let me go to the third last entry. Then after I go outside of your ears. I've been explaining too much today. Now the next date is on the 29th of the month of April. On the 29th of the month of April, remember, the ledger account is correct. On the 29th, we purchased the inventory for 1,670, and this is correct. The statement is incorrect. Therefore, the correction must be done in the creditors reconciliation statement. On the 29th, it say goods, but we say purchases on our site. It's the same thing at the end of the day, where they recorded 1,760 instead of 1,670. So this amount is overstated. This amount is overstated. And it is overstated by the difference between the two figures. Let us check how much it is overstated by. 1,760 minus 1,670. 1,670. So now this closing balance is overstated by 90 rand. Remember, why do we again say the closing balance or the balance is overstated by 90 rand? Because this amount is more by 90 rand than 1,670, meaning than the amount it was supposed to be. And it is on the debit side. Debit side is a plus, and debit side is increasing the closing balance. Now the last proof again, if we say 16,033 plus 1,760, we get 17,793. So that 17,793 include a 90 rand that was not supposed to be there, which is the difference between 1760 and 1670. So now our balance is overstated. And once again, if the balance is overstated, what do we do? adjustments, less adjustments if balance is overstated. So now once again, this 90 rand belongs to goods overstated that will be recorded on the debit side as a deduction. Goods overstated. Overstated. Now I want to bring your attention to the other side of the same entry as I did with the previous one. That if, so that you don't say I did not touch in all views, in all angles. If this amount was 1,760 and here we had 1,670, assume this was the case and the correct figure is there, that will mean now the amount that was supposed to be here is 1,760. That will mean the amount that was supposed to be recorded here will mean that it should have been 1,760. So now you'll still do the same thing and say, okay, this is what has been given to us, and we identify that there is 90 rand. And you say the amount that was recorded was less than what was supposed to be recorded by how much? By 90 rand. Meaning now our closing balance would have been underestimated by 90 rand. And if the closing balance was underestimated by 90 rand, what do we do? Therefore now that will mean we have to go back and say add. Now if the balance is underestimated, we add the adjustments if balance is underestimated. That will mean in that case the 90 rand now will have to be recorded on the credit side as 90 rand, increasing that balance which was underestimated. So now with all of that, guys, I think I have done enough grace to explain this topic. So now let us draw the line and we check if does this balance with our creditors ledger account. Then we get the total of the debit side, which is 110 plus 900 plus 90 rand, and this gives us a total of 1,100. Then after we have balance per account, the last line item will be balance per account, and the balance per account will be the difference between 1.1 minus 17,793, and this gives us 16,693. And now I have to confirm if this figure is the same as that of the ledger account. In the ledger account, we had a balance at the end 16,693, and here we have 16,693. And with that being said, guys, let me say God be with you. Shalom. Thank you.